Monday, May 2nd, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at how the Russian ruble is leading the world out of a IOU nothing monetary system that we've had since August 15th, 1971. And I'm not defending Putin or anyone else here. I'm just looking at the facts and what's happening. And the fact as well that this IOU nothing monetary system hasn't been imposed on us for the last 50 years, mainly militarily by the United States and the Anglo-American Empire, and also through deals like the petrodollar. So before I start and tell you why I think this is happening, I'm going to reference you a book that I think is really important in order for you to understand the nature of money. And it's an economics book, but don't be scared because it's from the Austrian School of Economics. It's by Murray Rothbard. Anyone can read it. You don't have to have a PhD in economics. And anyway, I tweeted out the other day that anyone who can run a household properly is an economist, because that's the definition of economy in the ancient Greek. It's the management and running of a household. If you can keep a tight ship in your household fiscally and also run it properly, you're an economist. I truly believe you don't need all these degrees, PhDs, doctorates in econometrics and all of that. You look at the people running the central banks, of course, they're all PhDs, and look at the mess they put the world in. So the book is What Has Government Done to Our Money and the Case for 100% Gold Dollar. There you go, Murray Rothbard. I think you can get a free PDF, and I would recommend that you go to the Mises.org website. They have a bookstore there, and buy it from the Mises.org website, because that will help the Mises Institute, which is the major center of learning for the Austrian school, and they're based in Auburn, Alabama. What Rothbard does, the Crusoe analysis or the regression theory analysis, he goes back into antiquity, or into before you had societies evolved, hunter-gathering tribes and things. And he notes that people used to barter things, meat for I don't know, for water or whatever. They used to barter. And then as society and groups evolved into villages and towns, cities, countries, people became more specialized, and people also found that there were certain commodities that were very easy to exchange, or they were the most marketable commodity, and those commodities became money, because if you couldn't match goods when you're bartering, it got very difficult. And what money did as well, the most marketable commodity, is that it allowed for specialization. So Farmer A or Farmer B, they could, maybe Farmer B didn't really like farming, could go and do something else. People didn't have to produce everything to be subsistent. So it specialized the economy, and it helped the economy grow. And this is why we're here now, because of sound money. But what Rothbard argues is that we don't need government to tell us what to do. And there are some other economists, though, and I bought the book. Someone told me I should buy it. I haven't read it yet. I bought it recently. Like this guy here, David Graeber, he says that money is really debt, that there was never like barter and the most marketable commodity like Rothbard. He says that there were the tablets, credit, letter of credits. But I would argue with Mr. Graeber that those letter of credits had to be extinguished. And how do you extinguish that? Well, by payment with real commodities. I guess in Mesopotamia, the tablets, that was a receipt for wheat or whatever, for grains, and it had to be paid. And money extinguishes debt. It's a different thing. Debt and money are different. With money, you can extinguish debt. And that's how we come to the IOU nothing nature of our current system that has been running really since 1971, that allows one nation, the US, and I'm not having a go at the US, it's just the people that are running the system, allows them to issue this credit and debt. And and it doesn't allow you also to extinguish that debt. And have you wondered why the national debt is going up so much, from like under $1 trillion back in 71 to now almost 31 trillion? Well, it's because the US is broken. There is no monetary system. And you can read this article here by John Exter, who actually worked as a central banker at the New York Fed. He helped found central banks like the Ceylon or Sri Lanka Central Bank in the 40s. He helped organize the Philippine Central Bank. And he says in 1972, after the closure of the gold window, that we had a non-monetary system, an IOU nothing system. And unfortunately, it's led to where we are right now. So yes, there is debt in our current monetary system. The problem is that there is no money to extinguish that debt. And that's why the debt keeps growing and growing, because the only way to pay off the debt right now is for the US Treasury to keep borrowing, to pay old maturing debt. They can't extinguish that debt because they've taken money out of the system. And I think that's what people like David Graeber get wrong. They're the Keynesian paradigm that debt is money is completely wrong. That is something different. Money helps you extinguish that. But if you have a monetary system where there is no money, how are you going to extinguish that? And that's why I think Russia is leading the way. And it's ironic because we're told, and it might be somewhat true, that Russia is more authoritarian, and they probably are. They have a different culture than we have in the West. Yes, they might look like us, but they're a little different. But and even China, you could argue, I think they're moving to a system that will actually be fairer for the whole world. And I think that's why the Anglo-American Empire is so adamant to get rid of Putin, because he's exposing this system, because Wall Street and the City of London are the major proponents of this system. The City of London is where you trade the most foreign exchange in the world. Trillions of dollars go through the City of London in the foreign exchange market. And one of the reasons for that is because we have an unhinged, non-monetary system where debt just balloons, and the more debt there is, the more trading there is. But I think what's been happening since the start of the war in the Ukraine and the Russian move to kind of base the ruble partly on gold and other commodities is telling us that the rest of the world has had enough of this non-monetary system. It hurts them even more because they're not part of the club, and they're forced to keep to stay in this system, or else they don't survive, and that creates inflation for everyone, because the money, well, there is no money because the currency is debt. And the IMF as well which is an arm of the Anglo-American Empire, IMF, World Bank, they've been pushing all the emerging market countries for over 50 years to keep borrowing this IOU nothing, to keep collateralizing these loans with real assets in their own countries, and their loans that eventually go bad, that only lines the pockets of the bankers on Wall Street in the city and also the corrupt elites of these countries. I recommend John Perkins. He's written books about this, the economic hitmen. So what's the way to keep track of this evolving move towards, I would say, sound money, really? And I think the Russians and the Chinese know about this. Does it mean it's going to be great for the people in Russia and China? I don't know. But I think, generally speaking, for the people around the world, it's going to be a lot better. It's going to be painful, of course, because we're going from a really bad system that has abused us generally. And the transition is always very difficult. And that's why we're seeing all the problems now: supply chain, rising prices, shortages. And it's going to get worse because the Anglo-American Empire is going to dig its heels, but eventually they'll have to go to a sound money system. And I think it will be a lot better for everyone. So the way to keep track of this, I think, is to keep an eye on the ruble exchange rate, the US dollar, USD/RUB, as you can see here. This is how many rubles you can get from a dollar. And ever since Russia used gold temporarily to stabilize the ruble by making the ruble, fixing the ruble at 5,000 rubles per gram, and then coming out and saying that they want payment in rubles for their commodities. And recently as well, we've heard Russian officials say they're looking at a possible basket of commodities to back the ruble. This shows us how it's helped the ruble and how the dollar has dropped from 140 and it's now below where it was, the dollar versus the ruble, before the war started. So I think this is going to continue. And I'm not surprised that this has come out of Russia, because Russia is very rich in natural resources. And I think it's had enough of getting paid with paper that's worthless, really, that's becoming more and more worthless. And I think 2008 was a warning shot for other countries other than the US, that that our central bankers and politicians are ready to create all these IOU nothings out of thin air to a very big amount. And then March 2020 was another. It was the real warning. And I think that's what's happening now. Some people will say that this is planned. It's like a reset. Maybe so, but we're not here to really argue that. We're here to see where we think this might be going. So if we're moving away from a system of unbacked credit, IOU nothings, to a system, more honest system, I would say things that are real are going to be valued more. And that's the reason why I'm still favoring hard assets, and especially gold and silver or precious metals. So with that, let's quickly look at where the markets are this morning. It's 20 past 8 a.m. London time. We've got spot gold at $1883.50. That's down $13. High's been $1,900. The low is around here, $1882.60. Spot silver is down 3 cents, $22.75. Range has been $22.87 to $22.55. The Dow future is up 180 points. So we dropped almost 1,000 on Friday. As I've been saying, I don't think that these markets, stock markets, are out of the woods. NASDAQ is up 90 points. S&P 500 is up 23 points. FTSE is down 76 points, 74.57. Euro Stoxx 50 is down 50 at 37.39. The main event this week, of course, will be the FOMC decision on Wednesday. It's priced in, they're going to hike by 50, but the key thing there will be the comments and also the press conference by Jay Powell, and also his answer to questions from the press. To the currencies now, sterling is down slightly, 125.69. The euro is unchanged, 105.48. The dollar is up 1/3% at 130.21 versus the yen, and the dollar is up 0.5% versus the yuan at 667.30. Swiss franc is unchanged, 97.26, or the dollar Swiss. Aussie dollar is unchanged, 70.55. The dollar is unchanged versus the Canadian dollar, 128.58. And the Kiwi dollar is down 1/3% at 64.36. General commodities, WTI crude down 0.5% at 103.35. Brent crude is down 0.5% as well at 106.40. High grade copper is down 2.3% at 4.30. So copper getting hit hard. US nat gas up 33.5%, at 7.51. So we'll quickly have a look here at the US Treasuries. I'm not sure they're trading here in London because London is closed for a bank holiday. But the last quote I have for the 10-year is 294. Yeah, we're approaching that 3%. I see the 30-year reach 3% overnight. And I don't think it's going to get better. I think yields are going to continue to rise. Bond prices are continuing to go lower because this IOU Nothings system is backed by these bonds. Bonds that you can't pay off. You can only pay them off with more bonds. And that's crazy. It's the definition of a Ponzi scheme, I would say. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.